Okay, we've got a chart up here of the S&P 500. As you can see here, we've put in the retracement levels, the 38, the 50, and the 62% retracements. We've put these in because there's a good chance that the S&P has topped here. We say this because we are now on day 28. Actually, the next trading day will be day 29. Day 28 was May the 1st. And as you can see, we closed at 28.30 and the 10-day moving average is 28.41. So we've dropped below the 10-day moving average, which is a strong sign that this daily cycle decline has begun here. There's also a few other signals, as we can see here on the RSI indicator. We've dropped below the significant 50 level. A lot of traders use this level as a sell signal. When we drop below this level, it's a sign that momentum is slipping. Also, if we go down to the histogram, although the MACD has not crossed over yet, the histogram has been coming down since early April, really, which again shows that momentum is slipping, trend has been slipping. So there's a good chance we're going to drop down now into a pending daily cycle low. Now, where we bottom is the next question. We have the 38% retracement level at 26.60. The 50% at 25.71 or the 62 at 24.81. It's still possible that we could come down and test these lows here, but I don't think we will, because we've basically run out of time here. As I've said, this daily cycle is now 28 days strong. So, even if we get 40 trading days out of this daily cycle, you're still only talking 10 trading days left, 10, 12 trading days left, 2 weeks. Even if we get a scary decline and, maybe we drop down to the 62, which would be at just under 2,500. So it'll be interesting to see where, in fact, we do bottom. But, the bears will be out in force saying that the bear market has begun, volatility will spike. But, now with countries opening up again, lockdowns being dismantled in multiple economies worldwide, there's still, the probabilities are very high. We dropped, as you can see, under 2,200 here, that this will end up being a 4-year cycle low. So my guess is that we come down maybe to the 50 and we're off again to the races in this next daily cycle. If we move on to gold, this basically is a chart of gold, which basically shows that gold also has been declining into its daily cycle low, and now it's a bit more mature because it bottomed earlier than equities back in March. But gold now is on day 33 of its daily cycle. So, probably a lot of analysts are going to stay here because we're getting the drop of equities down into its respective daily cycle low. We may see, and we saw that on Friday, a rally in precious metals. So, we haven't even dropped to the 38% here. We did not get to oversold levels on the RSI indicator. We did drop to oversold levels on the histogram, but nothing really to speak of in a significant way. The safest play here would be to wait. As we can see, the 10 day moving average is at 1717. If we bounce back above this, then there is a good chance that gold has printed its daily cycle low. I still think we're going to go under this level here, which was just over 1660. So if we can maybe drop to somewhere, the lower this drops, the better, we believe, because it would set up a very strong trending move in precious metals going forward. If we head on to the miners, and this really is where all the action has been in precious metals over the past 6 to 8 weeks, as we can see here on the GDX chart, miners practically have doubled and have been extremely stubborn in dropping down into their respective daily cycle low here. Nowhere near oversold on the RSI. Very shallow decline on the MACD histogram. Also, we dropped only temporarily below the 10-day moving average, and now we're back above it again. Exact same timing band as gold. We're on day 33. So yeah, again, we will know early next week whether gold has printed its daily cycle low, and as I've said, it's going to be helped a lot by that pending steep, most likely, daily cycle decline in equities. Okay, I'll see you on the next video.